Hey, Steve Saretsky here. As always, the Canadian real estate market update with a particular focus on Vancouver. If you get any sort of value or entertainment out of these videos, all I ask that you hit thumbs up and subscribe. Questions, comments, put those below. Actually, a really large news week this week. If you aren't following the events in Hong Kong, I highly encourage you to check that out. I'm certainly not the expert on the topic, but I have been following this for the past 3 or 4 months, and it's interesting to sort of see it start to ramp up here. So if you're not following along, basically the premise is Hong Kong government is about to pass a bill, an extradition law, which basically allows the Chinese government to essentially extradite people from Hong Kong into China and go through the law process, the trial process in China. So basically how that works is we know the Chinese government, communist government is extremely corrupt. They can basically fabricate a law or fabricate a crime that happened basically in China, and then say, oh yeah, this guy committed X crime in China. Then they, now they have the legal rights to go knock on Buddy's door in Hong Kong and extradite him to China, whether or not he actually committed a crime or not. So basically this threatens the actual democracy of Hong Kong. And so you actually had, I think, one of the largest protests in Hong Kong history this past week. Millions of people marched to the streets in protest of this extradition law. Speaking with some of my clients that live in Hong Kong, and obviously reading some of the news articles, is that this is potentially a very large event where how is it going to impact capital flows, right? That's one of my main interests is, especially like you have to think about it, if you're a wealthy individual and you're obviously say built this empire and you're looking to preserve your wealth and your assets, all of a sudden you're exposed to a corrupt Chinese government that can technically come and knock on your door at any day and seize you for whatever crime that they fabricate. You would probably want to shift some of your assets. So of course we know that Vancouver has a very large ties to Hong Kong. We have especially after Expo 86, we had that Hong Kong wave of money that came in here. So certainly Vancouver, you would think is a potential destination, but what we're hearing right now is basically, there isn't this mass exodus of capital flight, but there's basically quote unquote a slow trickle, and that trickle right now is actually going into Singapore as sort of a hedge to move some of your assets out of Hong Kong and potentially away. It appears as if this bill is going to get passed. But if you want more insights on the subject matter, I actually recommend you checking out Kyle Bass. He's been talking about this really for the last year. I think he's the expert on the topic, or certainly one of them. He actually did a Real Vision interview on that topic, which I'll link in just a minute. I'll clip that in. But I actually have talked about Real Vision multiple times here. If you want right now, there's actually, this is probably the deal of the year. They're giving away subscriptions right now for $1 for the entire year. Just for context, I paid about $400 for mine. So if you want a subscription to Real Vision, I'll put a link to that below. It's $1. It'll probably be the best dollar that you'll ever spend because you get expert interviews like Kyle. Now, just a quick context on Kyle. He was the guy that shorted US subprime, made his billions of dollars in that. But basically his thesis on Hong Kong is that they're going to have to basically break the US dollar peg. And with that, their economy is so leveraged to, leveraged to real estate and their loans, etc. And that he doesn't think it's going to end well in Hong Kong. And again, how does that start to shift capital around the world? That's obviously something that I'll be watching for. I don't think there's anything imminent here, but if Vancouver was going to get some sort of catalyst, potentially, I don't think it's going to come from China, given the trade war, and because of that, having to beef up their capital reserves. I think it's potentially from Hong Kong seeking refuge from China. So I'm going to actually link that interview to Kyle Bass. I'll link the preview here, and you can check that out, and I encourage you to watch the full-length video.
From 2008 to 2018 were the best 10 years that Hong Kong will ever see. Will never happen again. The Hong Kong banking system is now almost 9 times their GDP.
Wow.
Of the, call it today, it's 850% of GDP. 280% of GDP of the 850 is lent to Chinese property developers into China. They're the most levered nation in the world, with the most expensive real estate in the world, with an economic arrangement with a country that is no longer synchronized. It is a recipe for disaster.
So, I mean, obviously some interesting tidbits from Kyle Bass there. If I'm looking at it, I don't see any sort of, if there's going to be a catalyst here to change the direction the Vancouver housing market has been in, I certainly don't think it's going to come domestically. We actually had CMHC's Evans Adal and OSFI come out again this past week. It seems like they're coming out every single week to reiterate their views on the stress test. And these guys both basically came out last week saying that it's here, barring some quote-unquote catalytic event, that the mortgage stress test would not be removed. If they're looking at it from what's happening specifically at the big banks. I've argued that a lot of these high leveraged borrowers are actually shifting to the private lenders, but they're looking at it and saying, well, people with a debt to income ratio or loan to value of greater than 450%, those originations are actually declining, so that's making the banking system more stable, et cetera, et cetera. But if we're looking at the stress test being in place, just to sort of see where the Canadian macro environment is, you have the stress test in place, you have residential mortgage credit growing at like 20-year lows, and you just, in Q1 of 2019, Canadian households just printed the record high debt servicing ratio. So it's basically how much of your debt servicing payments, how much of your payments are going towards servicing debt. And that just reached a record high. And so just for context, no, not to sound all alarmist and whatnot, but just for context, the US, the United States, our neighbors to the south, they have the lowest debt servicing ratio on record right now. And that's because they took the medicine in 2008, they deleveraged, they paid down their debts, they repaired their balance sheets, and so you have Canadian households with record high household debt servicing payments, and you have the US with record low debt servicing payments. Now, combined with that, you now have the Canadian balance sheet. Households have the lowest annual savings rate since 1961. So basically, all their savings, all their money is going towards servicing debt payments. There's literally no savings for a rainy day. In BC, there's actually a negative savings rate. And then you have the yield curve in Canada, where 61% of the yield curve is now inverted. That's the most since the financial crisis and the tech bust in 2000. So these are certainly ominous signals. This last chart here is 61% of the inverted yield curve from Otavio Cortez of Crescat Capital. I've been bugging him, friend of the show, to update that chart, so he sent that, and that is obviously significant, right? So I'm just looking at that. That's pretty simple. That's a very simple data to look at and just say, okay, well, where are we today? We're kind of late cycle here. Obviously, you have, now you have record high household debt payments, so everybody's sort of saddled by this debt. You have sort of record high home prices. You have this, record low savings rate, and you have a huge chunk of the inverted yield curve, which definitely is not a strong, optimistic indicator, right? So I don't think Canadian households are prepared for what's coming. Again, everybody, I think probably the fallacy is that there's infallible central bank that's just going to lower interest rates as they are, or they're going to, and that everybody's going to be fine. But the thing is, you're only at 1.75% on the overnight rate today. So there's really not much room to cut. You're already actually running a negative interest rate. So the stimuli from cutting that rate from 1.75 is akin to pushing on a string. But again, we've talked about that in these videos all the time, so I don't really need to reiterate that. But that's really been what I've been watching for this past week. Basically, I think the Hong Kong event is significant. It definitely bears watching. I think that the Canadian household situation is still extremely vulnerable, and of course, given where we are in this cycle and the very obvious things that I have just pointed out, I think there are still substantial risks involved. And that's pretty much it. But it's, it's just